Hi, Dwayne Duggan, Remax Boulder Video Podcast. Today we have Jessica Shanahan from Premier Lending. Jessica's been a loan officer for, how many years have you been a loan officer there now?
I've been a loan officer for 3 years,
Okay.
but I've been in the business for 13.
Okay.
Yeah.
One of the unique things about the last 3 years is that people are recovering from various forms of credit issues and getting back into the home market. In fact, it's estimated that about 7 million buyers a year are coming back into the market from repaired credit, and we call that a boomerang buyer. So today we're going to talk a little bit about these boomerang buyers and how they can get their credit going. So Jessica, let's talk a little bit about how soon after a short sale or foreclosure, bankruptcy, somebody can dive back into the mortgage market to get a home.
Perfect. Okay. Well, so after short sale or foreclosure, it's going to be 3 years for an FHA loan. FHA is going to be the easiest and quickest way to get your foot back in the door. If you're a veteran, though, it's 2 years.
Okay.
So that's something to keep in mind. I would really encourage real estate agents to ask that question. You know, are you a veteran? Because if you are, then you can get back in quicker.
A little sooner.
Yeah. There are a couple programs out there that allow you to get in after a 12-month wait period, but it's just going to be a higher interest rate and not, like a short arm,
Right.
So maybe not as desirable, bigger down payment as well. But FHA is definitely going to be the easiest way to get back into it, and it comes along with that low down payment. The only drawback to an FHA loan is going to be that mortgage insurance. But again, you're just getting back into homeownership, right? You can definitely refinance out of that.
Okay, and FHA is limited a little bit, especially in the city of Boulder, just by the price limit or the loan limit amount.
Well, it goes up, high balance goes to 474, 950. Right. So yeah, in Boulder, maybe that's still a little tricky, but it's got some flexibility.
Yeah. Okay. What's the buyers out there, their biggest misconceptions about getting back into the market?
So they think their credit is trashed, right? So they don't even want to look. They're burying their head in the sand. They don't even want to look at it. And that's sometimes not the case. If you had a short sale with just a couple of late payments before you had your short sale, your credit might still be fine. So I would definitely encourage, them to talk with a professional. And then the other misconception is that they have to wait 7 years to get back in, because that's what it is on a conventional loan. It's a 7-year wait period. But, like we just talked about,
right.
You don't need to wait that full 7 years. And then the last one, which is kind of a big one and kind of weird, but it's come up quite a few times lately, is they had a bankruptcy. There was a mortgage in that bankruptcy, and the client thinks that they just had a bankruptcy. So They think they can get back into the market sooner. They're looking at 2 years from a bankruptcy to get back into homeownership. Really, you have to keep in mind, you probably had a short sale or a foreclosure if there was a mortgage on that bankruptcy. Right. So the wait period might be longer than they think. And sometimes that's shocking.
Okay.
Yeah.
So the basic thing is to get in to see you and find out really what's on their credit report.
Exactly.
And then once you know what's on the credit report, you can start to work at improving that. So what are some of the ways that a buyer can improve their credit and make themselves ready to buy?
Yeah, so first of all, I would encourage just monitoring your own credit. Definitely there's a lot of great services out there. You are entitled to one free credit report a year, so I would encourage buyers to go to annualcreditreport.com and get their free credit report. And then also just reach out to us and talk to us, because we have credit analyzing tools that can help you make a game plan to get your credit back on track. Some of them are really quick and easy fixes, and some are, planning. So maybe 6 months to a year out. But either way, we have the tools to help you make that plan. And then the other great idea is just to start with a secured credit card. Super easy thing to do. You can get one at your bank, but just start that, making your on-time payments and keeping your balance low.
So a secured credit card, what are they secured against?
So you just put down some cash, like $250, $500. Yeah.
Deposit type thing.
Yep. Okay. And then that's your own money working for you.
Gotcha.
Yeah.
How about any other credit tips?
Sure. So again, just consult with a lender. I think that's huge. Just don't run away from it, right? Don't hide from it. Just face it head on. So many clients that I have been pleasantly surprised when they just come in and talk to me. They're like, oh, it's not as bad as I thought it was going to be, right? And then the healthy mix of credit, which is 2 installment loans, 3 revolving credit cards, keeping those balances under the 30% mark. And that's going to give you a really good credit score and will help build your credit really quickly.
Okay, and just out of curiosity, like student loans have been in the news a lot.
Sure.
How do those affect somebody's ability to get a loan?
So that would be an installment loan. I mean, it doesn't
Okay.
really affect your ability to get a loan other than that, even if it's in deferred payment status, now, this is a new rule, we have to count some kind of payment against you.
Okay.
So keep that in mind. We have to use 1 or 2% of the balance, or if you can provide a letter from the student loan lender that says your payment will be X amount, we can use that as
Oh,
well.
okay.
Yeah.
All right.
Yeah.
And then, so a buyer who's worried about their credit report or their credit rating, what do you recommend they do?
Just bite the bullet.
Bite the bullet and
Just
start
pull
making
it.
sure you
Yeah.
Pull it and start paying your bills on time.
Right, exactly.
That's
You'd
the
be
best way to do
surprised how quickly your score can increase. I mean, really, with like 6 months of good payment, you'll see a really dramatic increase, I think.
Okay, anything in particular a buyer shouldn't do while they're trying to get their credit ready to buy a house? Like, probably not a good time to go out and buy the Ferrari or skip a payment.
Right.
But anything in particular that
Right.
jumps out at you as far as that goes?
I mean, that is such a fantastic question because that comes up a lot. Someone goes out and buys a dryer, a washer and dryer, because they're going to need one for their
Right.
new house. But no, just don't do
Don't
that
do that.
until closing day. You know, after you sign those papers, you buy whatever you want.
So same things with the American Furniture Warehouse
Yes.
ads. You don't go buy those interest-free for 1 year because
Yes.
that really can
Yeah.
mess you up for a while.
It
so.
can. Yeah.
Okay, Jessica, any other last-minute tips on buying a home right after short sale, foreclosure, or bankruptcy?
I think we kind of covered it.
Okay, thank you, Jessica, for
Yeah,
being here.
thanks, Dwayne.
Remax Boulder Video Podcast signing out.